My name is Gary R. Albrecht. I'm the founder and CEO of GPA Trading. I'm also the mastermind behind the creation of the Market Price Anticipator software. I'm so excited and honored to be presenting to you today, and with that in mind, I thought it would be nice to just dispense with a lot of the more traditional intro slides so we can get to the fun stuff, which is learning to properly analyze and trade the markets. I mean, really, what could be better? As I must admit, I'm truly dedicated and passionate about teaching and providing traders with a solid education in order to successfully maneuver the markets. I am, however, limited on time today, so we will cover just a mere smidgen of the actual wealth of information I endearingly impart to my students during each of our live trading classes. In my classes, I like to leave no stone unturned. We cover every aspect of trading. We cover it all. Now let's begin. If you haven't already done so, this is a quick snapshot of our website, GPA Trading. You can find it at gpatrading.com. We welcome you to peruse our website. Today's topic is the line of progression trading strategy. Whether you trade Forex, stocks, commodities, futures, doesn't matter the financial market, this line of progression trading strategy will boost your trading results. Before we get started in class, as well as any webinar, we like to stay with a positive mindset. Today's mantra I'd like to share with you is a very good one. Learning is not attained by chance. It must be sought for with order and attended to with diligence. You take a moment to pause and think about that. You're not going to learn by chance. You must seek it, study, work hard with diligence in order to succeed. And as always, the disclaimer. All trading involves risk. Therefore, we recommend you do not trade with money you cannot afford to lose. Never risk more than 2% of your entire account balance on any one given trade. For options traders, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided during today's webinar will be for your educational purposes. Now, some key components we want to briefly touch on. And anticipating future market conditions. Well, what does that have to do with the line of progression when we anticipate future market conditions? Well, the key components are going to be support and resistance. You would be amazed at how many traders try to sell into support and buy into resistance, not understanding the importance of the support and resistance. Next up is the trend direction. It's imperative we know the direction of the trend. And as we go further, utilizing multiple time frames is the caveat to success. All time frames will be involved with the movement of stock prices, commodities, futures, Forex. As the time frames cycle, they cause that stair-stepping affair. You ever notice how when stocks move higher, they tend to stair-step higher with little pullbacks and then break new highs, pull back, break new high? That is due to cycling time frames. So as we go on and define the line of progression, it is understanding how the lower time frames cycle within the larger time frames, or as we refer to it as the line of progression. Let's take a look at what we're exactly talking about. First and foremost, when the time frames align, you'll notice the software we have what we call a price action indicator, number 1 on the top, and a trend momentum, the direction of the trend, number 2. And the idea is to set up the PAI we call for price action indicator and the trend momentum, TM for short. So the goal is to align the time frames together across multiple sets of time frames. Notice here, on a monthly, we have a monthly starting to turn back to the downside on the trend momentums, and the price action is turning down as well. At the same point in time with that swing point high, we see the weekly tightly bunched turning back to the downside and the trend momentums turning to the downside. And of course, during that same time frame, we have a daily topping and rolling. So notice the key. If we align things together, that's when the biggest market moves occur. And based on how those time frames are pointing. So is this difficult? We're simply looking what direction is the trend momentum and the price action moving. when both the TM and the PAI are in the same direction, you'll get very specific signs and symptoms as the additional time frame cycle. So let's continue. Not only did oil in this case go from 107 and end up bottoming around 43 as we're bouncing back now, but the question is the current bounce going to be a major trend reversal and black gold Texas tea, the Beverly Hillbillies, as we like to call oil, is it in a true reversal? Well, we're starting to see some signs of what's transpiring. But prior to what's on the hard right edge, let's review how the time frames align, set up the line of progression. Now, here's the same charts taking a weekly perspective since that swing point high and a daily perspective since that swing point high, again, as it moved down from that 107 area down to 43, from 107 down to 43. Notice we have the same alignment I showed you a minute ago where the weekly was topping and rolling, the monthly was topping and rolling, and the daily was topping and rolling. Once the daily finishes cycling, it then starts a cycle against the trend of the weekly down and the monthly down. And this line of progression is anticipated in advance. What does that mean? Well, as my 4-hour lower time frame cycle up, my daily bottoms and reverses. Then when they cycle back down, we call this phenomenon a slingshot or a snapback. And the line of progression states very simply, as long as our weekly is turning over headed down, remember that I said before and I'll continue to say the rest of the day, as long as the TM and the PAI, TM and the PAI, price action indicator, are pushing lower, we're going to expect the daily to exhibit very specific behavior. Not only does it top and reverse and move price down nicely, but when it starts a contra-trend movement, we notice the daily starts to depressurize, and it forms this phenomenon called a slingshot. It's when this snapback occurs. So as the daily is expected to continue to snap back further to the downside, snap back further to the downside over and over and over, for as long as that weekly remains pointing down. Notice when the weekly started to turn up, we started to get this bounce back to the upside. But while it was pointing down this whole time, you had an opportunity after opportunity after opportunity. As you'll see now, the first was where the daily topped with the weekly and the monthly. Later, if I'm in this trade or I miss it, I go, well, why is the strong trend downward in a stair-stepping affair? Remember I said that earlier. Price always moves in stair-stepping because of cycling time frame. So notice as the daily starts to cycle up during this phase, we do get a correction, and then shortly thereafter it forms and involves what we call an engaged slingshot. This is the terminology we use with the software, and it goes right along with following the line of progression. So this strategy is simple. For weeks, our students made a mint on trading oil to the downside because for week after week after week after week after week after week, the weekly PAI and trend momentum kept headed lower. So we knew the strategy long in advance was to sell daily slingshots once, then do it again and again and again and again. You're starting to see a redundancy here, repetitive behavior. And as long as it continues to form and engage these slingshots, that's my entries to sell. Well, we're not going to have enough time to go into it, but you'll notice we have these little triggers here. On the lower time frames, as this cycles and we get these daily slingshots down, you get these triggers for selling on lower time frames telling you it's time to sell as the daily starts moving lower in the expected direction of the weekly moving down. So again, this repeats itself over and over and over, and this of course can last 1, 2, 3, 4, 5, 6, 10, 15 times. It depends how long the weekly stays pointing down. And as we can see, it continued to do so over and over dozens of times. Until the last couple, we got a slingshot lower and lower, that stair-stepping affair up and until when did it start to reverse? When our weekly went to pointing up, and our monthly, if you'll go to the next slide, from the previous slide, that is, you saw the monthly is also showing signs of engaging toward the upside. So let me go back one slide. Notice the monthly right now, hard right edge on oil. We do have a bounce from the 43 handle back to the 57. So what's happening? My monthly is starting to turn. My weekly, which I'll show you in a moment, is starting to turn and pushing up. And the daily is also in a move higher. So as we go to this next slide, notice the weekly is pushing higher, allowing that monthly to continue to push. So the weekly is expected to continue to push higher. And while that continues, we expect for this to continue for several more days. As long as my weekly remains pointing up, we're going to do the inverse of this. Instead of selling daily slingshots lower, we're going to start buying daily slingshots higher and ride that weekly out for as long as it'll go. As we can see again, over and over and over, it repeats itself. Now let's look at an example of a different pair, those of you that trade Forex. Here's the pound dollar. Most recently, the pound dollar is on a tear to the upside. It's bounced about 700 pips from its 145 area low to a current high in the 153 handle. And it's bouncing nicely. What again are we seeing? We're seeing a monthly starting to turn. We see the weekly, both the trend momentum and PAI pushing higher, and we see the daily trend momentum and weekly, and all three. We got a daily trend momentum PAI headed higher, weekly headed higher, and the monthly PAI starting early stages of turning. We don't quite have a crossover on the trend momentum yet, but the PAI, price action, is. So what's the bias going to be? While my daily points up, my weekly's pointing up, we're going to simply use the lower time frame to start to buy 4-hour slingshots. And notice, as it depressurizes, 4-hour forms that slingshot, daily still pushing higher this whole time, it pushes higher. Again, we get another little depressurization, a correction, it engages, makes another new high based on the cycling time frames. And this behavior, again, ladies and gentlemen, is anticipated in advance based on the signs and symptoms. As long as a daily is pushing higher, then the recommended line of progression from a 4-hour perspective is once the 4-hour tops and rolls, this daily says, no, I'm not turning over, I'm still going up, then we buy a 4-hour slingshot. Next go around, the 4-hour turns over again, the daily still says no, trend momentum PAI still headed higher, we buy the next 4-hour slingshot. And it repeats a third time, daily still pushing up, daily trend momentum and PAI, both are pushing up, we buy another 4-hour slingshot. Well, this again is a 700 pip move, but notice how you get pieces and parts to each equation. If I was to drill down to 1 hour, we'd see a little trigger saying go long, trigger going long, trigger going long, based on the slingshot higher, higher, and higher. Well, what does that do? Does that just work for Forex? Does that just work on oil, commodities, futures? Where does it limit? It has no limit. Here's gold. Gold currently is moving up, but previously, what did we have with gold? We had gold with a strong move down, over $150 worth of a move down, and since then we're starting to bounce. Well, notice, yes, my weekly and monthly started to move lower on the left side. That's why we got the big move down, and since we made a low of over $150 move from the swing point high of 1224 up here down to this low of 1175, we see that we're bouncing. Well, we're starting to see the monthly bottoming. It's still turning, but what's happening? The weekly is turning back up. The PAI and trend momentum are turning up. My daily is engaging up. So notice we have entries based on a 4-hour trigger, a daily engaging, and bang, bada bing, we see gold has moved nicely today and has made a nice hearty move to the upside. Well, previously, before we had our weekly turning back up, it was facing down, and our trend momentum PAI was turning up, was facing down with a slingshot. We had the daily topping and rolling, moving from overbought to oversold. During this move down, which was substantial, what was the line of progression? You're starting to get the idea. When my daily is pointing down during this time, we simply sell 4-hour slingshots. Anybody out there trade gold? These slingshots on a 4-hour produced over $20 moves on gold. And as many of you know, trading gold, you don't have to or require gold to move $20, $30, $40, $50, $100 in order to make some money on a nice gold trade. You can do it in a matter of a couple of dollars. Well, notice, the 4-hour did exactly what it was supposed to. While that daily was headed lower, we slingshotted and went lower, and that was a $20 move, depressurized, did it again, went another $20+ lower before the new reversal. Well, what's changed since this reversal? The daily's now turning up. Everybody see that? Trend momentum is up. Price action indicator, PAI, is up. So can someone tell me what the next line of progression is for the 4-hour? It's pretty simple. Make it simple, keep it simple. When the daily trend momentum at PAI points up, we then look to buy a 4-hour slingshot. So we're going to need gold to come down and start turning over on the 4-hour. As it starts to depressurize like it did to the upside here, it'll depressurize to the downside. As it depressurizes, if this daily trend momentum and PAI stays up, we then go to buy the 4-hour slingshot in the coming hours. And a 4-hour, for example, takes about 12 to 24 hours to form and engage. So over the next 12 to 24 hours, should this turn over and this remain pointing up, I automatically know I'm going to buy a 4-hour slingshot to the upside. Well, what happens if the 4-hour turns over? Well, I can sell that, yes, because I have multiple time frames on a lower scaling agreement. But if my daily starts to turn and hook out, then gold's going to make another push lower. So it doesn't matter what gold ultimately does. One belief, and some will say, that gold has bottomed in reverse and we're going to have a major trend change to the upside. Others believe this is a temporary bottom. We still have further to go before the major up move. Well, with our classes, not only do we provide the software that gives you signs and symptoms every which way but loose, we also give you very critical make or break levels. The next level of interest for resistance is 1224. If we break 1224, it's adding more fuel to the fact that this is a major reversal and we're starting to move higher. But we don't have the agreement just yet on the monthly. The monthly's still pushing down, not pushing up. So should this continue to push higher and this turns out, then we're going to start to do what? Instead of buying 4-hour slingshots higher and higher, once this daily makes it to overbought into this area and turns over, we then, while the weekly continues to push higher, will buy daily slingshots higher. So as I tell my students, it doesn't matter if gold is in a major reversal or gold is still headed lower. We trade the line of progression and we're able to get in high probability trades over and over and over by simply following the cycling time frames. Well, what type of results do we get from following this line of progression? What does that do for us? Here's gold, and just showing the same scenario. This is when gold was on that move higher. We have over $128 move, banking profits along the way as we went higher, slingshotting and on, while our weekly and monthly were moving up. And then that's not only $128, which extrapolates over $29,000 in a trade, but then we wrote it down when it topped in reverse, monthly topping, weekly topping, daily topping, and we've written that down $150 worth of a move. So again, those of you that trade gold will be shocked and amazed. I have students that have retired, moved to Florida from the north, and live in large because they trade simply gold based on our line of progression and our live trading classes. And we do get, for visual students that love visual aids, not only do we tell you when it's starting to top and roll, we give you triggers to give you signals along the way. And we're not going to have time to get in every component. This is our live trade management system that will actually place and manage the trades for you. And if you're not in front of your computer knowing it's supposed to slingshot lower, for example, I can tell this automated trade manager, hey, I want you to sell this next daily slingshot down because at this point in time my weekly was headed lower. And notice that's a $30,000+ move on gold on that one trade. Well, here's a student of ours that has 8,600 pips and counting on multiple 4X pairs, following the line of progression. These continued to wrap up to a total of 18,000 pips. If you have a standard lot on that, that's $183,000 on the continuation of trades following a line of progression. Well, we have a scanner called the Slice of Heaven. When I want to find out when these time frames are topping and rolling, when I'm ready for these big moves, I have a scanner that will tell you when my monthly, weekly, dailies are moving down or when they're moving up. And for those of you that are not position traders and like to be in longer term positions, want to day trade and scalp, you can set it to a daily 4-hour, 1 hour. Or for those true scalpers out there, you can set it to the same principle, being a 15-30, 1 hour. There's one rule we follow. You never trade without alignment of the 4-hour in the workforce. We nicknamed the 4-hour the foreman and the lower time frames of the workforce. Price never moves without the 4-hour, 1 hour, 15 and 30. This is the bulk of the hard-working time frames that gets the move started, and then they follow the higher time frames. So let's continue. Not only did it go from 8,600 pips to 18,300, and then here it is in his trade station showing it continues to run, increase. Look at this. Over 1,000, 1,300 pips, 1,300 pips, 3,000 pips, 2,000 pips. You total all these together, over 2,000. That's your 18,000, simply following the line of progression. Here's a few others. Again, here was gold moving higher. There's my over $110 move on gold. So we take gold up, down, every time the time frames switch in reverse direction, we trade it accordingly. Gold moving down, we're down 128, I showed you a minute ago. Here's one for the pound dollar, 414 pips. Continue to see success. So before we go on and tell you some option traders, here's from one of our students that strictly trades options, and since he's been in our class, is now trading Forex because of the success. He talked about a position he had where he made $1,200. Then he re-entered the trade, made an additional $300, both using options. He went on to say, if I would have been trading options on my own without your software, I'd have bailed on it long ago for a loss. But now he's looking at making additional profits. And if oil continues to go through as expected, he's going to pay for his subscription very quickly. Well, this individual started with a trial and paid for an annual within the next week, and then he went on to do private coaching, all from the first few trades, paid in full. Thanks for all your hard work in developing the system. He's not only applied for a Forex account, and he's trading Forex now, that he's adding to his Thinkorswim account. He's fired his financial advisors because he can do a better job with his finances than the advisors can. So, where do we go from here? Before we get into all the particulars that's involved, I wanted to go to a live market condition to show you. The monthly on the pound we just talked about a minute ago. Everyone could see my chart, yes? The monthly is telling us with this big trigger here, this is not only do we have the time frame and alignment on a monthly, but this software looks the lower time frames and the higher. It scans and looks at all directions. So it's imperative that we understand when we trade, we not only need to trade in the direction of one time frame, we need to trade in the direction when they're all aligned. And that was over a 2,600 pip move to the downside based on that trigger. And what's that based on? Notice, this is just the pound for those Forex traders. When my monthly started to turn over, I got a trigger. Well, my weekly was turning over at the same time from that swing point high, right? Swing point high, same swing point. At the same time, my daily, we need to scroll back in time, but we can see it too was also moving from overbought conditions to oversold. And remember the phenomenon we showed you. When my weekly, monthly, and daily align, you're going to see large moves. And what did the daily do for it? As it cycled down, it then started to slingshot lower and 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 lower as my weekly kept pushing lower. And as my weekly keeps pushing lower, it too started to slingshot lower and lower and lower, all the while my monthly is doing what? Very simple. Monthly trend momentum and PAI were pointing down. So since this 700 pip jump to the upside, could we have known that? Yeah, notice the signs and symptoms. My monthly is now turning up. My weekly is turning up very strongly to the upside. And as long as my monthly and weekly are up, what are we doing? We're going to start buying, based on the line of progression, we're going to start buying daily slingshots to the upside. We're just getting into overbought territory. So those of you that trade Forex, watch the pound. The projected path on the pound is to go sideways to lower while this daily depressurizes. Then as long as that weekly stays up, which we anticipate it will, we're going to then go into buying daily slingshots like we were selling them over and over and over and over and over. And each time, as I mentioned, when we get a slingshot, we trigger on the slingshot buying to sell. Here's that weekly slingshot here, turning over from this point. I'll draw my little line here for you, so you can see what I mean by not only do we visually see the sign on the chart itself, but as you go to the next lower time frame, you get those triggers. Everybody go, wow, that's impressive. So you mean to tell me, sir, as long as I look for trend momentum and price action, whatever direction they're pointing, I can go to the lower time frames and expect them to exhibit very specific behavior? Yes. And even this weekly, when the daily started to depressurize, my weekly at this point was forming this slingshot, and then it turned and engaged down. How do I know when I start to see this turn over that it's ready to move lower? That's when we go to that lower time frame and say, okay, are you turning over? Are you triggering? Bingo, there we have it. So not only do you get a visual aid on the chart, you get a trigger to tell you when to enter, when to take profits, these gold triggers or take profit triggers along the way. As the time frame starts to cycle, it'll tell you to take profits because we're about to have another correction. And as long as that correction is still going against my weekly and monthly headed down, as it was over in here, we continue to do what? Sell those daily slingshots over and over. Now, S&P. Everyone likes to trade the S&P. Those of you that trade E-minis, you've never seen anything like this software in trading E-minis. Those guys that trade E-minis get a point or two on the S&P movement, and they think they died and went to heaven. Well, based on this, we have trade alerts that we send out. We tell you exactly what to do, when to do it, buy, expect it's going to go higher. Price is going higher as long as we stay above our critical support levels, and we follow the line of progression. Our daily slingshotted higher, and that was one from our trade alert, that we were to buy and expect a new higher high. Why? Because at the time in which this daily engaged up right here, my weekly was pushing up as well. Trend momentum and price action were both pushing up when that daily formed and engaged and moved higher. Now notice the swing point low of 2064 to a swing point high of 2119. Well, that's more than a point or two. That's 40, 50 points plus. And that's the higher time frames. As they cycle, you're able to get in these trades. What is the Dow S&P been doing? My monthly's been pointing up, and even as it's turning over, it's slingshotting high. Notice the weekly. We're getting buy signals over and over and over and over and over and over and over. Yes, we got a nice pullback, but yet another one to a higher high, another pullback to a higher high, and yet another one to a higher high. So how high is the S&P going to go? As long as my weekly and monthly stay pointing up, right? See it pointing up, and I see my weekly pointing up, my next line of progression is to do what? Buy that next daily slingshot on cue. But again, we're able to get in these moves, make 15, 20, 30 points at a regular basis, and then as the higher time frames align, make literally hundreds of points based on that alignment. So again, if you're a position trader and you want to get big moves where you make 50, 100 pip or point moves on the S&P, then you align the weekly, monthly, and daily time frame. If you're a scalper and just an E-mini trader, you can get intraday with 4 hours as the daily continues higher. So watch this. It never ends and it never stops. When my daily started to bottom, this is past history, but you can choose any one of them. Daily's moving up, and during that period in which the daily moves up and it goes into overbought territory, long before it slingshotted higher a few times, we started to move into overbought territory. From oversold to overbought, what did the 4-hour do in this area? Lo and behold, turn off the auto scroll, go back in time, and we will see that 4-hour did exactly what it's supposed to. Exactly what I would anticipate it would do. Should it try to slingshot lower against the daily going higher, it's going to fail. End up with a price pattern reversal. Low, high, higher, low. Upon failure, you can buy and go long. But once it finally tops and rolls, what do we look for? Buy a slingshot higher, buy a slingshot higher, and again, and again, and again, and again, over and over and over. And remember, when these start to form and engage, how do I know? Well, I see it on the chart first off, but I go to my lower time frames, as we see this, I go to my lower time frames, and I'm able to see, if I can go back that far, let's see if I'm too far back, maybe I'm a little too far back. If not, you're going to get a trigger on the lower time frame telling you it's time to buy that scenario, and it was too far back. So there we have it. It doesn't matter if it's the S&P, the Dow, Forex, etc. It's still the same. And it's simply a line of progression, and all I need to do as a trader is tell me what direction is the trend momentum in the PAI moving, and if it's still moving in one direction, we watch the lower time frame cycle against it, and if this time frame does not respond to that cycle, then you look to sell the slingshots lower. If and when we reverse, we then look to sell slingshots initially to fail because it's going against a higher time frame. Then we start to buy for as long as what? That monthly stayed pointing up. But you can look at any Forex stocks, commodities, for anything. You do Amazon. Here's one Amazon. Amazon spiked up and is starting to pull back. Why? My daily's turning over. And why did we get a big push higher? Well, my weekly was engaging up at the time. When my weekly started gauging, what did we have? We had a daily bottoming and reversing, and what did we have on a monthly? The monthly still pushing up. So that was the reason why I told students that trades Amazon. I said, look for Amazon to make a new higher high. At the same time Amazon makes a new higher high, expect the Dow and the S&P, to make a higher high. It's done so, not by a whole lot, but it still made a higher high. So what's anticipated for Amazon? Well, my weekly still in overbought territory. It's starting to turn over. My daily is starting to turn over. So the bias, as I told them today, when it was up about $5, $6 more today, I told them in class, I said, look for this to move sideways to lower. And as long as my daily's pointing down, what are we going to do? If my daily stays, trend momentum and PAI stays pointing down, we then look for my 4-hour to cycle down. As it's moving and cycling down, we expect this to continue further, and once it finally bottoms, if that daily says no and doesn't turn up, we then start selling 4-hour slingshots lower and lower and lower. How cool is that? So again, it doesn't matter stocks, futures, commodity. Those of you in Europe that may trade the DAX is in a correction forming a big weekly slingshot. What happens when we get weekly slingshot? We go higher and higher and higher and higher and higher and higher and higher. Well, we're in the midst of a weekly depressurization, as we call it, forming that big slingshot back up, and that's what we're going to look for once the daily bottoms and reverses. Well, the daily started to bottom and reverse, but notice the weekly said no, it's not ready. So in the coming hours, we're going to expect this daily will engage down and push price back down first, giving this weekly a little more time to engage. But once it does, that's going to be a great trade to the upside, as it should move hundreds of points. On this down move, when a gentleman in our class asked about this, I said, look for this to move about 400 points to the downside. And there was that big move down. It went just shy of 400 points. Still got a little left to go back to this major support zone right there. So we're expecting a little more downside, then the weekly engages up. And when that happens, you buy it and look for a several 100-point move on the DAX. All right. So I know I've covered a lot. This program, as always do, we didn't even touch on all the components of the software. You get the software, you get the class, live trading classes, and you get our trade alerts. I have students that have paid for the annual subscriptions based on a couple of trade alerts, much less what they can do on their own as the cycling line of progression continues. Now, what is included in the software? We get a market scanner that allows you to tell what symbols you want it to scan, so it tells you every direction the trend is moving, from the 1 minute all the way to the monthly. You have a visual aid telling you what direction the trend momentum is moving, what slingshots, as we call them, are forming, when are they engaging. We have the Slice of Heaven Finder I briefly touched on. That's the one I can tell it to scan monthly, weekly, daily to get those big moves that are setting up either go down or go up, or you can curtail and customize it to a 4-hour daily scenario, so I want to do some intraday trading, or if I'm a simple scalper, I can set it to the 4-hour, 15, 30, etc., doing the lower time frames. There's also the Slingshot trade triggers, which we briefly showed you. Those were the red and green triggers, or wing dings as they're called. And it also includes the trade management system, which we haven't discussed in great detail, but it can manage your trade. As we see, we're managing a trade, and it will tell when to take profits, when to close, when to enter, etc. So that's a brief example of what the trade management system looks like live. And we have two new ones, a Platinum Asia scalping system, for those of you that may want to trade during the Asia system or Asia trading session. It's a specific scalping system set particularly for that time. And finally, the Triple P scalping system. So there's so many components that will overwhelm you with one of them works, so many options and tools in the toolbox for you to learn. And it's simple. The same rules apply to every trading scenario, and that's based on the cycling time frames equals line of progression. People talk about, well, it's alignment with volume and order volume, etc. Right. Well, you'll notice when order volume and volume hit a stock, it's the multiple time frames in alignment moving the underlying stock price. So in honor of David Letterman, who will be retiring in the next few weeks, we have a top 10 list. Why should we use the MPA PE2 software in the line of progression trading strategy? Because it automatically calculates support and resistance levels. It identifies the trend of each time frame. It monitors and tracks the time frame cycles, as I mentioned with those triggers, etc. It provides consistent entries, exits, and take profits based on the trade triggers, the slingshots, and the profit triggers. The trade management system both works to set it in advance based on any entry criteria, like sell a 4-hour slingshot, sell a daily slingshot, sell a weekly, whatever. And then the trade management system automatically will manage the trade. If you're in your chart and you want to enter the trade, it will automatically enter it per your instructions and then manage it to tell it to take profits where along the line you'll have it. Entry to exit. It fits any trading style. As I mentioned, you just simply watch the lower time frame cycle for scalpers. You watch the higher time frame cycle for those longer term trades. Dual scanners, always looking for the next big trade so you never miss it. And it works on over 800 plus symbols, stocks, forex, futures, ETFs, commodities, you name it. And most importantly, it delivers low risk, high reward, high probability trades over and over and over. Well, what's the special offer? We're giving an offer for this special program for $97. That will include the software, the live trading classes, about 8 to 10 hours of live trading classes a week, and the trade alerts. And once that trial is over, it goes to $3.99 a month thereafter. What we're most proud of is many students that started with simple with the trial are now annual subscribers. Over 90% of our membership have been with me for years. Not 1 month in and 1 month out, day after day, week after week, month after month, year after year. Numerous ones of those have been with me for 5 and 6 years nonstop. And this is how you take advantage of the special. Go to www.gpatrading.com/GPA trial. And we'll post that in the dialog box for everybody. There it is. Go ahead and watch and click on that link. Again, you get $97, no questions asked. You get the software, the classes, and the alerts. And as numerous students have been with us for many years will attest, you've never seen anything like this, nor our trading style and the way we conduct class. We're limited spots because I do not want to have a mass cattle call. I simply want consistent, determined traders that are ready to succeed and want a simple method in which to achieve that goal. Trading should not be difficult and it should not be complicated. It should be very simple. And this system makes trading very simple. I look for the direction and I know it's coming in advance, and it's always fun. I want to say thank you for attending the webinar, and we look forward to you joining us. And remember, why the Market Price Anticipator software? It empowers you to read and anticipate price in any financial market on time, in time, all the time. And are you joining a big group of people? Yes. We have over 107 countries counting. This is a screenshot from our website, and we're proud of the 107 countries that our students represent, and we welcome you, if you're not up here on this screen, to join us, and your map will then join our Educating the World, your flag from whatever country you're from.